Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Hamas says it will free hostages as scheduled on Saturday, backing down from a threatened delay and keeping the ceasefire intact. Another day, another threat. President Trump orders a plan for reciprocal tariffs on a country-by-country basis, with a report due by the 1st of April. Plus, Russian news agency TASS reports the Kremlin says Ukraine will definitely participate in one way or another in peace talks. Well, it has just gone 8 a.m. across the Emirates. I'm Johanna Versace in Dubai. We made it to Friday, yet another news-filled week. It was very, very busy in terms of all of the announcements coming through from the Trump administration, both on tariffs, but also geopolitically. The major news, of course, that phone call that took place between President Trump and President Putin, having a big impact on markets, I should say, as well, with European markets soaring yesterday in anticipation of some form of an agreement. But the other big headline today was the proposal vis-a-vis reciprocal tariffs. And in fact, what we found out from that proposal was that it actually isn't going to be implemented until at least the beginning of April. So on the back of that, markets basically heaved a sigh of relief. We ended up in positive territory yesterday for the S&P, up almost 1% higher today, up about 0.1% in futures as well. So inching back towards that all-time high for the U.S. index and still tracking positive for the week. U.S. dollar yesterday, after those reciprocal tariff headlines came through, slipped a little bit. Again, a relief trade there, some of the tariff premium being unwound in the USD. And then look at the U.S. Treasury 10-year yields back down to 4.53%. So we rallied about 7 basis points throughout the course of the session yesterday. So the hot inflation print took yields up, and then the relief about the tariffs took yields lower again. So we're back around 4.5%. And then Euro stocks, I wanted to draw your attention to this today. Futures not doing a whole lot, but we had a very strong session yesterday, again, on geopolitical optimism vis-a-vis Ukraine for the year. Just so you know, in case you haven't realized this, Euro stocks is tracking 14% higher. Compare that to the S&P, which is only up 4%. So big outperformance year to date for European equities versus U.S. equities. Flipping over, the major event to watch out for in terms of U.S. data today is going to be retail sales. And the market is penciling in a little bit of a slowdown versus where we were the last month. So that's something to watch out for as we look for further signals on the health of the U.S. consumer. So that's coming later today. All right, let's also move on to Asia and check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. For the week as a whole, Avril, it has been quite a positive week for Asian equities.
Yeah, we're seeing the region's benchmark climbing for the third session. Yesterday it was about the prospects of peace, and today it's about the tariff delays. And as you say, you know, not that immediate action coming on levies, that sigh of relief that's gone up among investors. And then the idea that if this is going to be taken on a country-by-country basis, as you say, then maybe the tariff path is unworkable. Amid this, that's helping to lift sentiment, although note here that Trump, according to reports, did talk about Japan and South Korea. He singled those countries out. We're seeing the yen among the worst performers today, reversing some of that recovery from a day ago following the US PPI numbers. We're also seeing Japanese stocks down. What is really fueling the climb in the Asia stock gauge today? It's the Chinese tech names again. Yesterday, we saw a late session sell-off amid maybe some profit taking, also some talk that the peak is in. Today, it's that continued recovery, and Chinese tech names are really leading the way. Jumana.
Yeah, also big week coming up next week with all of those Chinese tech names reporting. So it's going to be a big determinant of where the market goes from here. Avril, as ever, thank you so much. Now, President Trump has ordered his administration to consider imposing reciprocal tariffs on trading partners in his latest move against a global system he says is unfair to the world's biggest economy. Shortly afterwards, Trump met with Indian Prime Minister Narendra Modi, who agreed to begin negotiations to address his country's U.S. trade deficit.
Prime Minister Modi and I have agreed that we'll begin negotiations to address the long-running disparities that should have been taken care of over the last 4 years, but they didn't do that in the U.S.-India trading relationship, with the goal of signing an agreement. And we want, we want a certain level playing field, which we really think we're entitled to, and he does also.
All right, another day, another tariff headline. For more, Bloomberg senior editor Derek Wallbank joins us now. Let's just talk about this big announcement about reciprocal tariffs, because President Trump had posted about it on Truth Social, saying it was going to be a big day. Instead, what we got was a plan to introduce country-by-country tariffs, but we're not going to get the full details of the plan until April. What more do we know?
Well, Jemana, that's exactly right, and I think that that's going to be something that we saw that filter through the U.S. market. It's going to filter through other markets as well, right? There really was this sort of sense that perhaps the U.S. was going to come on with some big, broad one number that you could sort of compare to a light switch. It flips on, there it goes. But that's not really how reciprocal tariffs work. They are a mountain of administrative work. At the most maximal level, you're talking about going through the entire customs schedule and saying this item is this much, this item is that much, then put on top whatever, sort of universal barriers to entry may be. It is a ton of work. This is why the Trump administration has given until April at the earliest for things to come back, reports to come back on where these levels should be set. From there, you'd have to do a full implementation. That could take more time. And all of that time, weeks, months, as we've seen repeatedly throughout the second term of this Trump administration, that gives room for negotiation, room for talks, room for some of the things that that Trump and Modi were talking about. And look, you mentioned Modi. Let's talk about what India's done. Walking into that meeting, Modi and India had already started taking lower some of the tariffs that they had, trying to do some appeasements there, but also doing a couple of other things on the side, indicating that they would, for example, be willing to take Indians back home who might be deported by the U.S. Things like that. Trying to go at this administration in multiple different levels and find some way around it. So a lot of room until they hit, and also maybe some of that is negotiation room. That's something to be watching for.
Yeah, and it is not just the world of trade and tariffs specifically that President Trump has been talking about. He's also floating this idea of engaging in a three-way discussion with the leaders of China and Russia, so with President Putin and President Xi, to talk about defense spending and a potential reduction overall in defense spending. So what do we know about that proposal?
Well, this is something that might happen after the Ukraine situation is solved, which is to say in a completely different political reality than the one that we live in today, right? But Trump has been talking through this idea that he would like to get back to the concept of reducing nuclear stockpiles and maybe taking down global temperatures a lot. Remember, Trump is a person who's been saying repeatedly he wants less global conflict, and that's sort of a primary point of agitation for him. So this is something that he's thrown out as a broad concept, but we are, as I say, a very long way away from something like that becoming reality, because you do have a lot of conflicts that need to be solved first. Additionally, there are some concerns about what role China could actually play in solving some of these big global concerns, since they have moved so much closer to Russia recently. I think that is a real concern point that is running through both European capitals as well as Washington too.
Yeah, and also of note, the U.S. spent $850 billion on defense spending last year. It is a big number in the context of them looking to reduce spending outlays in other areas. Bloomberg's Derek Wallbank, thank you so much for the overview. Now, Ukraine's president says he told Donald Trump that Russia's Vladimir Putin simply cannot be trusted, which is why Ukraine needs security guarantees. The U.S. president held a call with his Russian counterpart this week, sweeping aside long-standing policy that nothing should be decided about Ukraine without Kyiv at the table. Separately, Russian news agency TASS quotes a Kremlin spokesman as saying Ukraine will definitely participate in peace talks in one way or another. And Hamas says it will free hostages on Saturday, as scheduled, backing down from a threatened delay. At least 3 Israelis held by the group are due to be released in the next round of a phased exchange for hundreds of jailed Palestinians. Hamas says Qatari and Egyptian mediators agreed to press Israel over the delivery of aid into Gaza, including housing supplies, medical equipment, and fuel. Egyptian state media showed trucks said to be loaded with the goods at a border crossing. However, Israel has pushed back, saying caravans and heavy equipment are not being admitted to Gaza from Egypt. And supporters of Hezbollah blocked the entrance to Beirut's international airport on Thursday after Lebanese authorities stopped an Iranian plane from landing. The confrontation unfolded a day after the Israeli military accused the militant group of using Beirut-bound civilian flights to smuggle money. Lebanese state media says the army stepped in to disperse the crowd. And still ahead, hear why Commercial Bank of Dubai says Trump's tariff threats could simply be negotiating tools to benefit U.S. interests. More on their economic outlook next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Asian equities are headed for gains today on signs that reciprocal U.S. tariffs may be delayed, allowing for negotiations that could reduce their impact. Joining us now is Deepak Mehra, Chief Economist at the Commercial Bank of Dubai. Well, Deepak, it's good to have you with us. I learned a new term this week, and that is tariff fatigue. I think the market is getting a bit tired of all of these tariff headlines. How do you cut through the noise?
Yeah, I think we need to take a bigger picture, like you rightly said, and see what's happening in the big picture here. Tariffs are a tool of negotiation for Trump. It's very clear, and he's proven that they work. So that's happening. On the other hand, tariffs are leading to what I call Trump tantrum, which leads to uncertainty for businesses.
Yeah.
That uncertainty could very soon result in economic slowdown if this continues for too long.
Yeah.
Companies may not have the clarity to invest. They may not have the clarity to hire more people. That may lead to an impact on economic growth, which has been very resilient so far. So I think that is where the Fed will have to then step in.
Yeah. Okay, interesting. So a couple of things to pick you up on. Let me just first start with the tariff comments. Are there any sectors or segments of the market where you think there is too much tariff premium baked in?
I think manufacturing side, where we have seen automobiles, now with steel and aluminum, automobiles get hit the most. And anything to do with infrastructure spending, which is one of the key focus areas for the U.S., will be hit the most by tariffs. So therefore, it goes against the benefit of the economy itself. And that is why you're seeing Trump now, recently, he's announced that it will be applicable from April. These are mere negotiating tools, but they're very effective negotiating tools.
Yeah.
My worry is that at what stage do they become a drag on the U.S. economy itself?
Okay, let's talk about that. So, assuming that does start to happen with the U.S. economy, you're also squaring it up against two very hot inflation prints this week. You had an upside surprise on CPI. You also had an upside surprise on PPI yesterday. How is the Fed going to think about the slowdown in the U.S. economy versus upside inflationary pressures?
I think the inflationary pressures also we need to look under the hood. And the PPI print yesterday, of course, if you drill down, you find that the components that are going to feed into PCE are actually coming off, are easing. Similarly, the CPI print was because of the January effect. It is the seasonality because businesses can't raise prices all through the year. They tend to raise it on 1st January. We've seen it for the last 3 years now.
Yeah, you sound like you're willing to look through it, but the Fed Chair, Jerome Powell, doesn't. The latest FOMC, they suggested they were going to be a lot more cautious on the path ahead for interest rates. Why do you think they're being so cautious then, given that, as you say, a lot of these upside surprises are coming from one-off measures?
I think even Jerome Powell and the Fed has a bias towards easing. And that was very evident from the December summary of economic projections. They actually projected that PCE and growth both will be higher in 2025, yet they were going for 2 cuts in 2025. So clearly, you have to look at their balance sheet. The balance sheet is still bloated. One of the objectives of the Fed, other than its dual mandate, is also to prepare for the next crisis. what if we have another economic crisis and the balance sheet is still at $7 trillion?
By the way, you could say the same about the U.S. government balance sheet as well, running a deficit of 6.5%. So it works both ways. S&P index is close to all-time highs yet again. We keep rallying. Assuming your thesis is true and we start to see a slowdown in the U.S. economy, what happens to U.S. stocks?
They are dependent upon earnings. The earnings are coming out strongest in the last 3 years. We were expecting, 11 point something EPS. We are now tracking 16.5 on EPS growth for the last quarter. So I think the stock market is taking cues from earnings, and they're taking cues from the Fed itself, with Jerome Powell constantly saying that risks are now balanced on both the sides. Clearly, there is a bias towards easing as far as the Fed is concerned. Trump tariff tantrum just makes the outlook even more uncertain, which means that rate hikes are off the table.
Yeah.
And that's why you can see the yields coming off. And that's what equities are.
Yeah, though there are a few voices out there beginning to talk about the possibility of rate hikes, right? So we'll see what the impact that could have on financial assets. I know that's not your core thesis. One of the big surprising developments this year has been the outperformance of European equities. Oh, yes. Nobody expected that to happen. Anyone you spoke to in December would have told you this was going to be the year that U.S. was going to outperform Europe, at least growth-wise, of course, yes. But equities now, we're seeing it too. Do you expect that to continue? And if there is a resolution in Ukraine, could that propel these European equities even higher?
I think there was a technical reason for that. European equities were oversold for too long.
Yeah.
So there is some sort of a relief rally. I think they've run their course. The Ukraine crisis resolution could give it a little more legs. But in the end, we have structural issues where economic growth itself cannot match with what's happening in the U.S., both in Europe and in UK. So I think there will be headwinds at some stage. Germany, France, we have economic issues, so unlikely.
Yeah, competitiveness issues. Great to chat to you. Always good to touch base. Deepak Mehra, the chief economist at the Commercial Bank of Dubai. Now, coming up, delivering solid returns. Talabat posts a full-year profit jump of 63%. We discuss the UAE firm's performance a bit later this hour with the CEO. Don't miss that exclusive interview at 8:40 a.m. Dubai time. This is Bloomberg.
Inside China, because of regulatory issues and things like that, they need to work with Chinese companies that develop AI. And I think that's going to be the case in the future. You know, wherever you do business, you may want to have a localized AI that power your devices. So Apple has been very selective. They talked to a number of companies in China, and in the end, they choose to do business with us. They want to use our AI to power their phones.
That was Alibaba chairman Joe Tsai confirming that Apple's iPhones will use its AI technology in its key product in China while speaking at a summit in Dubai. Well, it's been a stunning turnaround for Chinese tech giant Alibaba. The buzz around the firm's investments in AI has helped add some $87 billion to its market value since the January low, with shares touching levels not seen since 2022. So for more, let's bring in our China correspondent, Min Lo. Good to have you with us. Well, talk us through, first of all, what has been happening with Alibaba. The stock has soared, as we were just talking about, but also this arrangement that they've put in place with Apple. How significant is that announcement?
Yeah, you heard the chairman there saying, really underscoring how Alibaba has beaten its rivals, including ByteDance, Tencent, and even DeepSeek, to secure this highly coveted partnership with Apple. But it's likely, what we're hearing now from the information is likely not to be an exclusive partnership, given that the information is reporting that Baidu is also going to have an ongoing partnership with Apple as well. But still, you're seeing that big move move on the stock over the last few days since that story first broke. It's now confirmed by the company's chairman. And also that big rally year today, partly fueled by that DeepSeek themed rally that has really driven a lot of optimism around Chinese tech companies, is a big win for Alibaba, which has suffered several really turbulent years under the tech crackdown by Beijing and also the post-COVID consumption slump. And now with this partnership with Apple, they will be able to secure more affluent sort of client base and maybe boost their cloud revenue there. And for Apple, also a significant win for them because they have been pretty slow in rolling out the full suite of their AI features. As you heard there, the chairman saying that regulators require Apple to work with a locally accredited firm. So hopefully the rolling out of the full suite of Apple Intelligence would then help to revive the tepid sales that Apple has seen in China because it's been losing to Huawei and other competitors.
The elephant in the room here, Min, is you've got one of the largest U.S. tech firms partnering up with a Chinese tech firm despite the political backdrop here and the escalation of tensions between U.S. and China. How are investors thinking about this, especially when it comes to Apple and their specific exposure and foray further into the Chinese markets?
Certainly, it is a concern because Apple's risk exposure to China is relatively high, given that China is a major market and also a major manufacturing hub as well. And so you have seen Apple actually lagging behind the other Mac 7 players. Its revenue in China last quarter was down 11%, again struggling to keep up with the likes of Huawei, the slow rollout of the AI features, and Chinese consumers are actually very interested in these AI features, with more than half of consumers saying that slow rollout has significantly or moderately impacted their decision whether or not to upgrade the iPhone this cycle. So there is a lot of risk there, although some analysts are downplaying the risk of tariffs, given that there's still a lot of uncertainties about how that tariff negotiation will play out and whether Apple would be able to secure some form of exemption because Tim Cook is has had a long relationship with China. He has a good presence there as well. So still a lot of uncertainties there. Some analysts saying it's still a good defensive play because even with slower growth in China, it's still an impressive cash cow as a company.
Yeah, that is the case. Min Lo, our China correspondent, thank you so much. And a look at some of the other stories we're following this morning as well. Apple and Google have restored TikTok to their app stores following assurances from the U.S. Attorney General that a ban wouldn't immediately be enforced. The two companies had removed the app in the U.S. last month to comply with the law passed by Congress. On taking office, President Trump signed an order that delayed any action by 75 days. And coming up, we speak to Starbucks CEO Brian Niccol about what's brewing for their business in the Middle East and North Africa. That conversation next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Hamas says it will free hostages as scheduled on Saturday, backing down from a threatened delay and keeping the ceasefire intact. Another day, another threat. President Trump orders a plan for reciprocal tariffs on a country-by-country basis, with a report due by the 1st of April. Rebooting the region after a Middle East sales slump, Starbucks looks to revitalize its business. Our exclusive interview with the CEO of the world's biggest coffee chain is coming up. Well, it's just gone 8:30 a.m. across the Emirates. Everybody, I'm Giovanna Versace in Dubai. Happy Valentine's Day, by the way. We didn't mention that in the first hour of the show, but happy Valentine's to those watching. We are seeing a bit of green in the market, so the markets are definitely feeling the spirit too. We had a better end for Wall Street yesterday, brushing off some of the concerns about reciprocal tariffs. It looks like the decision is once again going to be postponed for at least a couple of months until April, at some point in April. So the markets looked that well yesterday. S&P ending the session up more than 1% higher. Today, futures futures leaning towards the green as well, up 0.1%. The USD not doing a whole lot today, but we did dip once those reciprocal tariff headlines came out, and the action being a lot less severe than what some people had been pricing in for. 10-year yields also staging a bit of a roundabout session. Yesterday, we rallied 8 basis points on the day, back to 4.52% now. At one point yesterday, we were up at 4.6%. So a lot of volatility in 10-year fixed income, but still sitting around 4.5%. And then European futures leaning towards the red today, down 0.3% in futures, though for the week, we are seeing very positive momentum. Yesterday, very strong performance out of these European equities, up almost 2% in trading on some optimism surrounding a potential deal for Ukraine. So that's been reflected in where these European equities are trading. And just a quick note on the S&P, as we get closer and closer to all-time record highs again, I thought it would be interesting to point out that the breadth is once again quite narrow. Only a lot fewer members are trading above the 200-day moving average, and that tells you that once again performance has been led by just a handful of stocks, and many of them in the Magnificent Seven. So that's just an interesting chart to think about when it comes to S&P breadth as this index continues to push higher. All right, let's also check in on Chinese stocks. Avril Hong is in our Singapore studio. Avril, we were just talking about the big jump in Alibaba shares over the last couple of weeks. How is that being reflected in the broader index performance?
Oh, absolutely. That is what is helping to fuel the Hang Seng. And you talk about the lack of breadth in the S&P 500. I think the same can be said for the Hang Seng, right? This is really a tech, AI story after DeepSeek kind of burst onto the scene, prompting this rethink, a better look at Chinese stock fundamentals. Of course, next week we're going to be watching out for those Baidu, Alibaba earnings, see what they say about cloud and potentially AI growth. Today, it's also about how we're getting more meat on the bones with the Alibaba Apple tie-up, maybe Baidu in the mix as well, and how they're going to be offering these features hopefully by the middle of the year when it comes to AI features on iPhones in China. So that's all fueling the sentiment towards Chinese tech stocks. But I thought I'd also offer you this chart courtesy of MLive's Mark Cranfield, or Mary Nicola, I should say, and that shows you how there's a valuation tailwind when it comes to Chinese tech names and Hang Seng in particular. You look at the 12-month forward PE ratios for the Hang Seng, it's lower than some of its peers. And if you look at this line in blue showing you the equity risk premium on the Hang Seng, that's actually higher than its peers. So something to keep in mind as we look at this Chinese tech stock rally.
Yeah, nice one. Avril Hong in Singapore, thank you so much for flagging that. Well, Starbucks CEO Brian Niccol is wrapping up a visit to the Gulf region, where the U.S. coffee chain has partnered with the Kuwait-based Al-Shaya Group since 1999. Niccol has been tasked with turning around a global brand that's faced headwinds, including price hikes, controversy over unionization, and boycotts over the war in Gaza. In its most recent results, December quarter same-store sales fell 4%, but an improvement from the 7% drop in the previous period. And shares are up more than 50% from last May's low. Here in the Middle East, Starbucks says it remains committed to growth and investment. Joining us now from Kuwait is Starbucks CEO Brian Niccol. Brian, good to have you with us on the show. Good morning. So you're speaking to us from Kuwait today. Talk to us about what plans you have for Starbucks in the Middle East region.
Yeah, great to be with you, and it's great to be in the region. So this is my first visit with our partner, the Al-Shaya Group. As you mentioned, it's a long-standing partnership, over 25 years. They have over 1,300 Starbucks across the region. And what I'm really excited about is all the growth opportunity in front of us. They believe, we believe that over the next 5 years, we can add nearly 500 stores, add 5,000 jobs to the region. Which is really exciting. The brand is executed really well. Our partners in the stores just do a fabulous job. I've just really enjoyed the visit, from Dubai to Abu Dhabi to Riyadh in Saudi Arabia, and now here in Kuwait City. It's just been a really wonderful trip.
Yeah, I think many people would be a bit surprised to hear that Starbucks is looking to expand the footprint in the Middle East region, given that your sales have been substantially impacted by the boycott that began right after the Gaza war. What are you planning on doing to turn around people's perception of your brand in this part of the world?
Yeah, first, look, the boycott and that whole information cycle, it's really unfortunate because obviously it hurts the brand, it hurts our partners in the stores. And the thing that's really disappointing about it is it's just not based on anything that's accurate or true. We've never supported any militaries, and we'll continue to always want to focus on providing great opportunities for our partners, providing great experiences for our customers with what we believe is the finest coffee in the world and the finest drinks and food in the world. So, we're focused on what we know to be true. We're focused on growing our brand around our mission of being the purveyor of the finest coffee in the world that really provides human connection in a wonderful way to hopefully improve communities and jobs that we operate every day in. So, I think the Alshaya Group and Starbucks are doing a great job in running our stores, providing these opportunities for our partners. And I'm excited about what's in front of us, and we're going to continue to talk about what makes Starbucks great.
Yeah, it does feel like there's a bit of a steep hill to climb, especially in countries like Egypt and Jordan, where sales actually fell more than 70% throughout the course of 2024. What are you going to do to get back that market share?
Yeah, look, I think the thing we're going to do is focus on being a great brand, providing great customer experiences. We'll continue to provide innovation as it relates to drinks and food. And you might have heard us talking about the idea of getting back to Starbucks. And one of the things that I'm delighted to see is our stores across the region are truly executing with excellence. And we're going to continue to stay focused that way. We want to give people the drinks customized the way they want it. We're going to do it the right way with our partners by providing great opportunities for them to work in our stores, grow with our company. And obviously for the customer, what we want to do is make sure we're providing terrific value and that we give them a great experience every single time. And we'll continue to provide exciting opportunities, both in food, beverage, and I think really that human connection around being able to have a place to connect, spend time with whether your family, friends, or just take a moment for yourself.
Yeah. Well, you've been the CEO of Starbucks for several months now, and one of the big decisions you took when you came in was to launch a restructuring plan for the company. How does the Middle East expansion goal fit in with the broader goal of restructuring and some of the job cuts that you have announced more broadly around the world?
Yeah, look, I think one of the things that's really exciting about Starbucks is that I'm not sure everybody realizes. Everybody talks about being a global brand. One thing that is definitely true is we have a presence all around the world. And the opportunity for growth around the world is really exciting. As I mentioned, just the Alshaya Group in this region is talking about adding 500 stores over the next 5 years, which creates 5,000 more jobs. And, that is true, around the world. A couple weeks ago, I happened to have the opportunity to be in Asia. So I spent some time in our China market, our Japan market, our South Korea market, and it was the same thing I saw there. Terrific partners, executing great customer experiences, and then tremendous opportunity to add more stores and get Starbucks, that third place community, human connection to more people. And that's what we're going to continue to focus on. And I'm really excited about what the opportunity looks like here in the Middle East region as well.
Yeah, there's a spanner being thrown into the works, and it's not specific to Starbucks. It's for companies all around the world. They're going to have to think about the possibility of tariffs. A lot of the components that you use, aluminium in your coffee makers, those might actually be subject to tariffs. How are you thinking about the possibility, and what are you doing to reinforce your supply chain in case these tariffs are imposed?
Yeah, so obviously, we operate across 88 countries, truly a global organization, and the same is true for our supply chain. So as environments change, regulations change, laws change, obviously our job is to figure out how to navigate successfully through all that change. And I think we've demonstrated over the history of Starbucks, we're pretty resilient when it comes to dealing with change. And that'll continue to be the case going forward because we've got great people doing the right thing locally. And we'll continue to operate that way. So however it changes, we don't make those decisions. All we have to do is figure out how to operate within whatever the changing environment is. And I'm confident in our organization and I'm confident in our brand that we'll be able to figure out how to do the navigating.
Yeah. I want to ask you about what the future looks like for your China business. I'm cognizant that you're in the Middle East right now, but Bloomberg, we reported that Starbucks was considering selling a stake in its China business. Can you just give us an update on how you see the outlook there?
Yeah, as I mentioned, I had the opportunity to visit the market for the first time a couple weeks ago. And what I was delighted to see is really terrific organization with great people, I think focused on getting that business back on its front foot and providing people the experiences that we know we're capable of. The competitive environment there has changed dramatically over the last couple of years, and we have to figure out how we innovate accordingly and fix our architecture both from a product and price standpoint, and then also stay on the front end of digital. And then how we go about growing, because the reality is that market's going to continue to grow for us. Today, we have over 7,000 stores. There will be many more thousands of stores in China in our future, and we have to figure out what is the best way for us to grow in that market, and that's what we're evaluating, while we also figure out what is the right way to get the business back on its front foot and really be, a market share leader in a new competitive environment.
Yeah. One of the recent decisions that you took was, for example, to drop the upcharge for non-dairy products. Why, in your mind, does it make sense to make little adjustments like this? How additive are they actually going to be to the bottom line of the business?
Yeah, look, I think one of the things that's really important for our business is to continue to listen to what our customers are saying, as well as our partners. And what I've been really focusing on is what are the areas that are creating some pain points. One of those was around the idea of charging for the alternative dairy. And so we decided to get rid of that charge. It makes it a better value for our customer. And frankly, from our partners or our employees, they were saying it was the #1 complaint they were receiving in the store. So we're like, well, let's resolve that problem. It's really easy for us. We can make that investment in our customer. So let's do it. And you're going to continue to see us find ways to provide more value every single time for our customers. And you're also going to continue to see us focusing on making sure that we have the best job in retail. And that's all about partnering with our partners to ensure they're set up for success so they can provide a great experience for our customers every single time. So the alt milk no longer charging really is a great example of listening to what our partners were telling us and then also listening to what the customer was telling us. And I think we provided a win for both the execution as well as the value proposition that we provide to our customer every day.
Yeah, that's a good place to leave it. Brian, we really appreciate your time this morning. Thank you so much for coming on our show. Brian Niccol, the Starbucks CEO. Thanks very much. Well, coming up, Talabat has reported strong results for 2024 after listing on the DFM in December. The CEO joins us for an exclusive interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Online food delivery company Talabat has reported net income of $346 million. That is up 64% year on year. Shares gained 4% yesterday following its first financial results since listing in December. Really happy to say that joining us now for an exclusive interview is the Talabat CEO, Tomaso Rodriguez. Also the first time we speak about your earnings since the listing. So lots to talk about. Let's just start with the results. You exceeded the IPO guidance for growth and profitability, very strong numbers. What is driving the company's performance?
Look, yes, we've been growing 23% on a year-over-year basis this year to 7.4 billion of GMV. I think when you look at the components of the growth is really three pillars. We have acquisitions of new customers that is very strong, but at the same time, the frequency of the previous customers, previous cohorts is also growing a lot. And lastly, I think multi-verticality, so more customers that are ordering only food, then they convert into ordering groceries and or subscribing into our subscription services, our co-branded card, et cetera, et cetera.
Is that why your gross margin was so high at 6.8%? Again, that is a lot higher than analysts have been penciling in.
Look, our margins depend highly from our scale, right? And the more we grow, the better the margins become. So I think it's really gaining efficiencies while we grow the business. And that's why over the last year, we did a very good job both in growing top line, but also our margins have been expanded, and now we're around 6.7% of adjusted EBITDA over GMV.
How important is it for your business to be multi-channel, as you say?
It's absolutely super important. When you look at our customers, the more products they use, the highest the frequency and the usage of the platform is, right? And when you look at a customer that orders only food, the frequency is around 3 to 4. But when they move to also ordering grocery, they exceed the 12 times a month ordering on the platform. It just becomes a habit for you to pull out your phone and press a button and get something delivered to your home.
Yeah, let me ask you about your guidance for the rest of this year. When you did the IPO, you signaled to the market that you were targeting a gross order value growth of 17 to 18%. Correct. For the year, though, you grew more than 20%. I'm just wondering whether your guidance is perhaps a little too conservative, given how strongly you grew last year.
Look, I think, yes, we had very good numbers for Q4 and for the full year. Still, I think in terms of growth, we are on the higher end of the guidance we gave for Q4. I think it's a bit just too early to change the guidance right now because we're just 1 or 2 months in the new year, but we remain very positive on the outlook of the year.
Are you disappointed at how the stock has done since the IPO?
Look, I think stock is not something you can control or you can influence too much, etc. But at the end of the day, the business is strong. Nothing has changed since what we discussed before the IPO versus today. Is something actually we deliver very good results for the year. We keep remaining committed on building a very, very good business and keep strengthening our multi-vertical offering, keep growing our customer base, and keep expanding into the business. So nothing has changed in the strategy, and the numbers are still very, very strong.
Yeah, so talk to me about the further growth expansion plans. Where is that going to come from?
Look, when you look at the food business, still there's a lot to do. When we look at our penetration in terms of population, and you look at the orders per capita in the region, we're just about 0.5 orders per capita per person per month, while people eat 90 times a month. So the headroom on food is still enormous. And actually, our food business has been growing 16% last year as well. For a 20-year-old company, that's good. The other thing is groceries. Groceries is a place where we have great opportunities. We're just about 1% of the offline grocery business, and our grocery business is growing at a 47% year-over-year rate. And we believe also in terms of margins, grocery may be even higher than food in the future.
Yeah.
And then we have our multi-vertical ecosystem value proposition, our subscription product. We're getting into fintech. We have a co-branded credit card that is doing super well. We have a postpaid product that is doing super well. So I think there are plenty of opportunities across the region and across the verticals.
Yeah. One of the topics that we talk about a lot on this show is the influx of people moving to Dubai. Do you see that as an opportunity, or do you see it as potentially could becoming a logistical problem or challenge in the future?
I think it's a great opportunity. When you look at UAE is one of our largest markets and probably the most competitive market also right now. And still, UAE this year, 2024, has been growing faster than the average of all the other markets. So I think there's a lot of opportunities in UAE.
Yeah. And you talk about the competition. How do you stand out in an environment where many of your competitors are also looking to introduce multi-vertical platforms as well? What is going to be your edge versus the competition here?
I think,
is it advancement in technology? Is that what you're doing better? I'm just curious to hear.
Look, I think what's very important is that you're super good at your core and what you do, and that's the primary reason why customers come to you, right? And so we need to make sure that we always have the best offering to our customers, that we have the best logistics and the largest fleet, and we deliver the fastest, etc. And then so your core offering has to be the best, and that's our key differentiator. On top of that, we build new services that will make the customers more loyal and more sticky to the platform, right? And grocery was the one we launched in 2019, way before any other competitor. But also now we're getting into new verticals that are unique to us, and we're always 1-2 steps ahead in terms of new products that we launch for for example, our co-branded card, our postpaid product, and more to come in 2025.
Yeah, well, I look forward to discussing it more with you throughout the course of this year. Great to have you on the show today. That was Tomaso Rodriguez, the CEO of Talabat. Now, Iran and Sudan have agreed to deepen ties with new partnerships in mining, banking, and livestock production. The announcement comes as the Islamic Republic moves to widen its influence on the fringes of the Middle East. Bloomberg's Simon Marks has more on this, joining us from Nairobi. Just bring us up to speed on what we know about these ties, Simon.
Hi there. Yeah, well, this agreement was made this week. There was a delegation from Tehran in Port Sudan, which is the de facto capital of Sudan at the moment, that the Sudanese armed forces runs. And these relations have been getting better and better ever since the end of 2023. Previously, Iran and Sudan had drifted apart because Sudan had provided soldiers to fight against the Houthis in Yemen, much to Iran's disdain. But since the war in Sudan has come about, there's been reason for them to grow closer. And it's a huge deal, really, because there's many people in the region that do not want to see these two countries get closer. The refounding of political Islam in Sudan is a big concern for Western countries. And not to mention, obviously, giving Iran a foothold on the Red Sea, too.
Yeah. Makes sense. Simon, thank you so much for that reporting. Bloomberg's Simon Marks in Nairobi, Kenya. Well, Nigerian lawmakers have approved $36.4 billion in government spending this year, acquiescing to a late request by President Bola Tinubu. The budget raises spending by 9% from initial plans put forward in December. This after the president asked for a bigger budget following higher than expected revenues. Senegal says it expects to reach an agreement on a new program with the IMF by June. This after the true state of its finances was established by a recent audit report. The IMF suspended $1.8 billion of accords with Senegal in 2023, pending local investigations into government finances. Kovimba Mining House, Zimbabwe's state miner, is planning a fresh bid to kickstart a range of projects. This a year after the government took full control of the company. Kovimba's CEO told us the company is looking to development banks, mining companies, and traders to raise $950 million. It's planning to develop lithium, platinum, and gold assets. And let's switch over and take a look at how markets are faring towards the final trading day of the week. It's been quite a busy week in terms of news, political news, and some of the economic news that has come through as well. But for the week, we are tracking gains for all of these indices. It's actually been a pretty positive week. S&P is up 0.5% for the week. Today, futures leaning towards the green as well. Eurostoxx futures are leaning towards the red today. But for the week as a whole, the Eurostoxx is up 2.7%. Mega gains yesterday for the Euro index. It was up 1.8% on some optimism around a potential end to the war in Ukraine. As for fixed income, the picture there also was a little bit turbulent this week. After that hotter than expected CPI print, we saw the market price out rate cuts for the year. Right now, as it stands, we've only got about 33 basis points of rate cuts priced in to the U.S. curve for 2025. That's why the 2-year yield is sitting at 4.3%. 10-year yield is back to 4.53%. So a turnaround over the last 24 hours. We're back up to 4.6% after the CPI. We had a strong PPI yesterday, but on tariff relief and the fact that President Trump didn't go stronger with tariffs, we're now back down to 4.53% again. But coming up in the next hour, we will be speaking to the Moroccan energy minister and the CFO of Adnoc Drilling after 9:30 a.m. Dubai time. But first, we'll get the investor outlook with Audrey from Standard Chartered Wealth Management. I'm Jumana Versace in Dubai. Stay with us for the second hour of Horizons Middle East and Africa. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Hamas says it will free hostages as scheduled on Saturday, backing down from a threatened delay and keeping the ceasefire intact. Another day, another threat. President Trump orders a plan for reciprocal tariffs on a country-by-country basis, with a report due by the 1st of April. Plus, Russian news agency TASS reports the Kremlin says Ukraine will definitely participate in one way or another in peace talks. It's just gone 9 a.m. across the Emirates. I'm Joanna Versace in Dubai. Welcome to the second hour of Horizons Middle East and Africa. Well, a couple of occurrences yesterday. We had a stronger than expected PPI print coming through from the U.S. that was largely shrugged off by the market. The other big event was President Trump's announcement of those reciprocal tariffs, but it turns out to be a plan to announce reciprocal tariffs, not actually an announcement of reciprocal tariffs. So what we saw was a bit of a relief filter through these markets. The S&P ending up in the green yesterday. Today, futures also leaning towards the green as well. For the week, we're tracking 0.5% gains. The dollar dipped after those reciprocal tariffs headlines came through. Today, flatlining, but yesterday we did see some weakness transpire. 10-year yields rallying back. We're now at 4.53%, so tracking 7 basis points lower on the day. Once again, on that tariff threat not really coming into fruition, and the can being kicked down the road for a couple of months. And then Euro Stoxx futures also interesting as well. Futures not doing a whole lot today, down about 0.3%, but we were up more than 1.8% yesterday in trading. So very strong day for European indices. This on positive momentum surrounding a potential solution to the war in Ukraine. So that has really invigorated some of these European equities. But for the year, though, Euro Stoxx index is up 14%. So very strong start to 2025 for European markets. Switching over, today the main data point to watch out for is U.S. retail sales, and markets are anticipating a little bit of a slowdown there compared to where we were the last couple of months. So if we do get a headline disappointing figure, what does that tell us about the strength of the U.S. consumer and signals about the U.S. economy? Really something the Fed is going to be watching closely as well. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, just run us through how the handover has been from Asia today.
Yeah, it's a really positive handover if you're looking at Chinese stocks. I mean, this week we've been talking about how Asia has been in a pretty upbeat mood. The gauge for stocks in the region climbing for a third session. Yesterday it was about the prospects of peace. Today it's about tariff delays, but it's also about how Chinese tech names have gotten over their late session stumble from a day ago. This is the picture you're seeing across China, and this is really that AI narrative fueling sentiment. I mean, we got more details of how Apple is going to tie up with some of these Chinese tech names to offer AI features for iPhones in China. We even had a timeline come through. So that's really what's fueling things along. And then the idea as well that if you were an investor that thought China's not going to be able to ride on the AI wave, DeepSeek has really come through and proven you wrong. If you've underestimated Chinese stocks in that sense, take a look as well at what we're seeing on the Hang Seng China. This is a gauge of Chinese stocks in Hong Kong, headed for its highest close since October. And of course, that was already after a rally following the stimulus blitz. So just to give you a sense of how far we have come. Of course, keeping an eye on the currency as well. There was a pretty powerful rally on the renminbi just a day ago, giving up some of that today, Joanna.
Avril, thank you so much for running us through the latest there. Avril Hong in Singapore. Now over to the region. Hamas said it will go ahead and free hostages on Saturday as scheduled, backing down from a threatened indefinite delay. The group said Qatari and Egyptian mediators agreed to press Israel over the transportation of prefabricated housing, tents, medical equipment and fuel into Gaza. Egyptian state media showed trucks said to be loaded with the goods at a border crossing between the territory and Egypt. However, Israel pushed back, saying caravans and heavy equipment were not being admitted to Gaza. So for all the latest, let's go out to Jerusalem now and speak to Bloomberg's Dan Williams. First of all, Dan, just walk us through the likely hostage release that is actually going to be taking place tomorrow, because for a while it looked as though Hamas were going to renege on that part of the deal, and Israel hit back, saying that if they did renege, then there would be the possibility the ceasefire could collapse altogether. So where are we now exactly?
Indeed, well, things appear to be back on track. We will find out this afternoon. As we've seen in recent weeks, on a Friday afternoon, Hamas publishes the names of the hostages it intends to free the next day, on the Saturday, tomorrow in this case. So today we're expecting it to publish the names of 3 male civilian hostages who are due to go free tomorrow, Saturday, possibly in the morning, as we've seen more recently. So really the Israelis are waiting for that publication, for those names to become clear, for the families to be informed. Keep in mind that at some point, these hostage releases are going to include the bodies of hostages who either killed outright on October 7th when they were taken or died in captivity. For now, live hostages are being given over. It'll bring some relief to the families, a great measure of relief to the families, of course, because there are lots of them out there waiting to see if their loved ones are on the list. So once that is published, Israelis will understand that this deal really is on course as it was previously. And then on Saturday, we will see the usual handover with Israel releasing a set number of Palestinian security prisoners in return.
I want to turn you to the events in Lebanon, because the ceasefire there is due to be reevaluated this coming Tuesday. And there's been a lot of talk about what presence Israel wants to maintain in the southern part of the country. Our own reporting from Ethan Brunner suggests that the army do want to keep 5 army posts in southern Lebanon, despite the fact that many in the U.S. and within the Lebanese government have voiced their opposition to them maintaining a presence. What do we know about what's going to happen there?
Indeed, February 18th is the new date, the new deadline for a full Israeli withdrawal from Lebanon under the ceasefire on that front. Keeping in mind that Lebanon's Hezbollah, that is the second front of this regional war that began in Gaza with Hamas, between Israel and Hamas. Originally, the original deadline was not met. It was extended at Israel's request. Israel saying that the Lebanese military was being slow to take over positions vacated by Hezbollah as part of the deal. The Lebanese say that Israel tried again to extend the deadline and failed. Israel has not confirmed this. What we are hearing from the Israelis is that Israel intends to keep 5 posts. Those are actually positions that abut the internationally recognized border that Israel said would give it a vantage point, strategically, tactically important, to make sure no one can sneak up on the border in the future. But obviously this is problematic because I think all parties involved wanted to see some sort of arrangement whereby the original recognized border is restored. Keep in mind, though, there really is no peace accord between Israel and Lebanon itself. And in the past, the countries through the United States have spoken of a possible border demarcation deal. Nonetheless, given the state of tensions here, given also the internal dynamic in Lebanon, where there's a new U.S.-supported government that's trying to show its credibility before the people, before Hezbollah, it will take quite a bit of criticism, especially from Hezbollah, on what Hezbollah will describe as an ongoing Israeli occupation of Lebanese soil, even though Israel says those 5 points are very close to the border, we're told within 100 yards of the border, and are simply meant to give a better vantage point for forces from a defensive standpoint. So it appears that come February 18th, there will be a fairly full withdrawal, but not a full withdrawal of Israeli troops from southern Lebanon.
Bloomberg's Dan Williams in Jerusalem. Thank you so much. Now, supporters of Hezbollah blocked the entrance to Beirut's international airport on Thursday after Lebanese authorities stopped an Iranian plane from landing. The confrontation unfolded a day after the Israeli military accused the militant group of using Beirut-bound civilian flights to smuggle money. Lebanese state media say the army stepped in to disperse the crowd. And Ukraine's president says he's told Donald Trump that Russia's Vladimir Putin simply cannot be trusted, which is why Ukraine needs security guarantees. The U.S. president held a call with his Russian counterpart this week, sweeping aside long-standing policy that nothing should be decided about Ukraine without Kyiv at the table. Separately, Russian news agency TASS quotes a Kremlin spokesman as saying Ukraine will definitely participate in peace talks in one way or another. For more, Bloomberg's Greg Sullivan joins us now. I mean, I find it even astonishing that the Russian news agency has to even say that Ukraine will be involved in the peace talks. And obviously, they have to be involved in the peace talks because, you know, they're one of the parties in the war. That aside, let me just ask you, what has the reception been like in Ukraine to this call that took place between President Trump and President Putin?
Well, in Ukraine, obviously, they're suddenly in a very difficult situation between a rock and a hard place. As you said, there's this big question of to what extent are they at the table in the the negotiations. And given recent comments from the U.S. Defense Secretary and the Treasury Secretary and Trump's own comments, as well as his willingness to have this call with Putin, that's a big question for Kyiv. Not only is the U.S. Ukraine's biggest supporter in terms of weapons and support, and that's a gap that's, if the U.S. suddenly pulled back, Europe would struggle to fill. But now there's the question of the negotiations themselves. Trump seems willing to talk to Putin one-on-one, and that leaves Kyiv wondering how they will fit in and how they can influence those negotiations that deal with them.
Yeah, we're going to hear a lot about security guarantees in the next few days. Munich Security Conference is taking place. Ukraine have said that they need security guarantees from Europe. What does that look like? And how has Trump's call with Putin change the landscape of what security guarantees Europe can offer?
That is actually the big question, and that will probably be one of the hardest points in any negotiation that happens. How do you form these security guarantees that the U.S. is either A, willing to provide, or that Europe can provide, that still deter Russia and that Kyiv will feel safe under? With recent comments from the U.S. Defense Secretary, that leaves a lot of things in doubt. What would actually be a guarantee that makes Kyiv feel secure, and that will be at the center of any negotiations. Given the NATO comments, that is a long-standing goal of Putin's. He's often used it as justification for the war, is to roll back NATO expansion. It seemed that the defense secretary was willing to go along with that. That's got to leave Kyiv disheartened as they seek NATO entrance for their own security, and also leaves European allies wondering what kind of guarantee or how involved the U.S. will be going forward.
Yeah, and what do you think, what is the likelihood of Ukraine agreeing to cede some of the territory that was taken over by Russia during the war?
Well, for a long time, Zelensky said that Ukraine couldn't cede any territory or sovereignty. There's been some softening in signals on that. There's obviously the realities on the ground. Russia has been making advances, is still making slow advances, continuing to bombard Ukraine with missile launches. So it's going to be a key bargaining chip. We heard from the defense secretary that he thought that some of that territory would have to stay. It will be a key to negotiations. What Ukraine is ultimately willing to accept may come down to how hard they get pushed or the lines that Trump lays out, and the military situation.
Yeah, crucial couple of days coming up. And we've got a big team down at the Munich Security Conference. And we're going to be getting a lot of headlines there from some of the key players involved in that space. So Bloomberg's Greg Sullivan on the latest with Ukraine and Russia. Now, President Donald Trump says Indian Prime Minister Narendra Modi has agreed to begin negotiations to address the U.S. trade deficits in a joint press conference. He added that the U.S. would offer the F-35 warplane to India as part of a bigger commitment to deepen defense ties. Trump also announced reciprocal tariffs could take effect against U.S. trading partners, including India, as soon as April. Now, still ahead, hear why Standard Chartered Wealth Management says it remains overweight on global equities and is looking to buy dips in the market. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Asian equities are headed for gains today on signs reciprocal U.S. tariffs may be delayed, allowing for negotiations that could reduce their impact. Joining us is Audrey, Group Head of Asset Allocation at Standard Chartered Wealth Management. Good to have you with us, Audrey. Let's pick up on the price action overnight and the fact that these markets seem to be trading pretty positively despite all of the tariff headlines. What do you think is driving Asian markets here? Is it hopes around the DeepSeek effect, or is it relief that tariffs are not worse?
Hi, I think it's a combination of both. So if you look at the recent news on reciprocal tariffs, I think markets is also relieved that, if they are going to negotiate tariff situation on a country-by-country basis, then the overall impact is not going to happen all at once and all together at once. So that also mitigates downside risk to growth. And having said that, so far what we have seen from Donald Trump is really a lot of talks about imposing tariffs, but we have not really seen very concrete action so far. So I think at the end of the day, I think markets may want to call his bluff to some degree because he might well be using tariffs as just a negotiation or negotiating tactic to get what he wants from the other country, but maybe not really intending to impose all the very extreme tariffs that he first initiated during his pre-election campaigns, given that one of his main key focus is also on how equity markets perform, and that's one key barometer that he judged his success upon.
Despite the fact that there is a lot of noise around tariffs, some of the so-called market hedges have done really well. So money has gone in to the USD, a bit of a dip overnight, but broadly speaking, the greenback has done very well over the last couple of months. Gold has done very well. The safe havens seem to be performing in this environment of uncertainty. Do you expect that to continue?
So I think gold could well remain bidded for now. Having said that, I think in the short term, we do find that it is a little overbought, plus positioning is also a tad stretch. I think what's really driving gold has been in part also because gold could also fall under precious metal, where tariffs may be imposed on it as well. So there has been some front loading in terms of purchases of gold, distorting market supply. And on the back of that, of course, safe haven demand, which is naturally what gold has been known for as well. But structurally, we do have an overweight to gold as well, given that we do see continued purchase by central bank as a key driver and support for gold prices. But short term, we do believe that at this point in time, it's probably a little overbought, but will be biased on dip when gold go towards maybe 2,800 or slightly below that for that matter.
Audrey, we've had a couple of hot inflation prints out of the U.S. this week. We had a higher than expected CPI print. Yesterday, higher wholesale price number came through, PPI jumping in above market expectations. Do you think it is time to perhaps think about the next rate move out of the Fed actually being an interest rate hike over an interest rate cut?
I think if that were to happen, markets will probably take it quite negatively. But our base view is it is just a one-off hotter than expected print. And if you look at the underlying of the price dynamic, actually it is driven by one-off spikes in prices coming from specific sectors, for example, used car prices, as well as auto insurance, both of which we expect, based on forward-looking indicators that we monitor, we do expect them to reverse over the next couple of months. But more importantly is if we were to look at service inflation, that actually notched down significantly, I think, which is a key good news because it means that inflation may not be as sticky as what markets fear or as high as what markets is concerned about. So overall wise, we are still expecting inflation to gradually trend lower, a bit of a bumpy buff, no doubt about it, but this will allow the Fed to then deliver rate cuts to the tune of about 1 to 2 rate cuts by the end of this year.
Yeah. Well, we've mostly been talking about some of the headwinds to markets over the course of this interview. I want to ask about a possible tailwind, and that is developments in Ukraine and the real possibility of peace negotiations. Yesterday, we saw a really big reaction in European markets. If we do get to a resolution in Ukraine, would there be a knock-on effect for global markets, or is this a Europe-specific story?
Yeah, certainly. Because if we were to get a truce in Ukraine and Russia, I think first off we might well see lower energy prices, lower oil prices, and that's likely to be a windfall or boon for most consumers globally, regardless of where they are from. But naturally, Europe being at the epicenter, nearest to where it's occurring, will naturally be disproportionately benefiting from it as well. Because since Ukraine-Russia crisis happened, there have in fact been a geopolitical risk premium that investors ascribe to Europe, both in terms of their proximity to the conflict, but also because they are very much dependent on natural gas as well as oil from Russia, which is a key source of energy for them as well. So with that, if there were to be a truce, that would likely lift risk sentiments globally, but benefiting European assets more so, and also in terms of euro currency as well.
Very clear. Audrey Go, Group Head of Asset Allocation at Standard Chartered Wealth Management. Thank you so much for joining us today on the show. Well, coming up, Adnoc drilling full-year profit beats. We dig into the numbers with the CFO later this hour. Youssef Salem joins me live in the studio for an exclusive interview at 9:40 a.m. Dubai time. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetti in Dubai. The global CEO of Starbucks has told us of his plans to add 500 stores in the Middle East over the next 5 years. This despite a sharp sales slump in the region following widespread boycotts. In an exclusive interview, Niccol told us the company has never supported any militaries.
The boycott and that whole information cycle, it's really unfortunate because obviously it hurts the brand, it hurts our partners in the stores. And the thing that's really disappointing about it is it's just not based on anything that's accurate or true. We've never supported any militaries.
Airbnb shares have surged in late trade after it issued an upbeat forecast for the first 3 months of this year, citing continued strong demand. The short-term rentals company sees nights and experiences growing at a similar pace to the same period last year, which saw a gain of roughly 8.5%. The results shows travel demand remaining resilient and follows upbeat commentary from U.S. airlines and online travel peer Expedia. Bloomberg has learned that HSBC is kicking off a fresh round of job cuts at its investment bank as new chief executive Georges Audrey continues his overhaul of Europe's biggest lender. We understand the redundancies will start in Asia as early as next week, but will ultimately affect employees globally. Apple and Google have restored TikTok to their app stores following assurances from the U.S. Attorney General that a ban wouldn't immediately be enforced. The two companies had removed the app in the U.S. last month to comply with the law passed by Congress. On taking office, President Trump signed an order that delayed any action by 75 days. Jamie Dimon says JP Morgan will scale back spending on some diversity initiatives that he sees as a waste of money, while also reiterating the bank's commitment to working with Black, Hispanic, and LGBTQ staff. In an answer to an employee question, JP Morgan's CEO said the plans to cancel some initiatives were about costs that went too far rather than blowback from the new Trump administration. So JP Morgan, just another one of the banks dialing back down on their DEI initiatives. All right, market check right now. Futures leaning towards the green, moderately so, after tracking a better week. S&P is up 0.5% for the week. The big outperformer this week, though, European stocks up more than 2.7% over the course of this week. A big jump yesterday for the Euro stocks, up 1.8%, given some of the optimism surrounding the Ukraine discussions. Not shown here as well, but the Hang Seng, in case you missed it, also up 5.8% this week. So very strong recovery in Chinese markets, in the Hang Seng specifically. Chinese tech stocks doing extremely well over the last couple of days. And coming up, we discuss Morocco's plan for energy security with the Minister of Energy Transition and Sustainable Development. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Hamas says it will free hostages as scheduled on Saturday, backing down from a threatened delay and keeping the ceasefire intact. Another day, another threat. President Trump orders a plan for reciprocal tariffs on a country-by-country basis, with a report due by the 1st of April. Plus, it was a beat for Adnoc Drilling's full-year profits. We dig into the numbers with the CFO, Youssef Salem. He joins me in the studio for an exclusive interview shortly. Well, it's just gone 9:30 a.m. across the Emirates. I'm Joanna Bersetti in Dubai. Everybody, keeping you up to speed on the markets here. The big announcement for reciprocal tariffs didn't actually come. We got an announcement about a potential announcement for reciprocal tariffs. And so on the back of that, markets breathed a sigh of relief. S&P ending the session up in the green yesterday. Today, futures also leaning towards positive, up about 0.1%. Also in focus yesterday, another strong inflation print, this time on the wholesale side. PPI also surprised to the upside. So that makes two higher than expected inflation prints for the week in the U.S., something to bear in mind. USD regaining a bit of a bid this morning, up 6 basis points. So we did drift lower after the reciprocal tariff announcements yesterday, and the fact that nothing imminent seemed to be on the table for the time being. 10-year yields also moving a little bit lower, down to 4.53%. We were at 4.6% yesterday, so 7 basis points lower just in the last 24 hours. And again, it has been quite volatile, but 4.5% continues to hold for 10-year yields. Euro Stoxx futures slipping a little bit this morning, down 0.4%. But let's switch over the board, because context changes everything, as we say in Bloomberg. Take a look at Euro Stoxx 50 and how far we have come. We're back to levels not seen since early 2000. It's been quite the rally over the course of the first couple of months of the year. So we're finally back to levels not seen since 2000 for the Euro Stoxx 50. For 2025, Euro Stoxx 50 is actually up 14%. Compare that to the plus 4% performance in the U.S. So for once, European equities are actually outperforming their U.S. counterparts. So this is the context for that. All right, let's also check in on Asia and maybe hone in a little bit on how some of the key Asian currencies are faring today on back of all of these tariff announcements or non-announcements. Avril Hong is in our Singapore studio. Avril, take it away.
Yeah, Jumana, I thought I'd do a vibe check on Asia FX. They have been so sensitive to these tariff headlines, right? We talk about China and Japan a lot, but I thought I'd just zoom in on the other EMs as well. I mean, you talk to any number of economists, they will highlight to you how some of these EMs are among those that are most vulnerable if we had seen those reciprocal tariffs take effect, simply because on a relative basis, what they charge the US a lot higher than what the US charges them. So I think there's that collective sigh of relief that's gone up among some of these FX traders in the region. And leading the way today, we're seeing the Indonesian rupiah, the Malaysian ringgit also doing well. I mean, just this idea that we could see not just this tariff delay, but maybe if we're going by a country-by-country basis, then the tariff plan not even workable. So something to keep in mind for context on these FX moves. When you look at the Indian rupee, though, maybe there's a bit of disappointment that we didn't get more clarity on the tariff front from that Modi-Trump summit, so it's quite flat today. Also worth highlighting on the offshore renminbi, it is reversing the strong rally yesterday, about 0.6% climb against the greenback, Jumana.
Avril, thank you so much for the overview on Asian currencies. Avril Hong in Singapore. Well, it's not just Honda and Nissan struggling to keep pace with growing international competition. Bloomberg Originals has been looking at the potentially existing threat now facing the once mighty Japanese car brands.
Remember this scene from the movie Too Fast, Too Furious? The cars racing each other are Nissan, Honda, Mazda, and Toyota. These Japanese automakers have also long been fierce rivals off-screen, which is why this was so significant.
Nissan and Honda have agreed to start talks to merge under a holding company.
Before, in a dramatic reversal, the plan was dropped.
Honda and Nissan are to scrap tie-up talks as both car makers report results.
The drama is really a reflection of a larger struggle.
Japanese car makers are seeing one of the biggest threats to their global domination of the automobile industry that they've ever seen.
Japanese automakers are really seeing their market share erode, particularly here in Asia.
Back in 1998, Japan was the leading car maker globally, making about 1/5 of all passenger cars. Now, that's fallen by almost half.
For Toyota, will they ever not exist? That is, hard to think. Perhaps there will be a time when Japanese automakers, some of these names, do fade into obscurity.
And subscribers can catch that report in full on the terminal and at Bloomberg.com. It will be available later on the Bloomberg Originals YouTube channel. Coming up, Adnoc Drilling has reported profit for the full year that beats the average analyst estimate. We speak to the CFO, Youssef Salem, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersechi in Dubai. Morocco has been pushing to boost its solar and wind energy capacity to move away from importing coal and oil. The kingdom's export potential of renewable electricity is attracting foreign investor interest as it gears up to co-host the FIFA Football World Cup in 2030. Joining us now is Leila Benali, Morocco's Energy Transition and Sustainable Development Minister from the Munich Security Conference. Good morning to you, Leila. Good to have you with us on the show. I just want to start with a mark-to-market of where Morocco stands right now with the push into renewables. Back in 2009, Morocco launched a multi-billion investment drive to ensure that up to 50% of the country's electricity was going to be produced from renewables. Where are we right now?
Good morning, Joanna, and thank you for having me in the show. Indeed, Morocco is like other middle-income countries working on its own sustainable development path, while at the same time helping the world deal with the energy transition, and not so many of us actually in this case. So now today we are very much advanced in our targets when it comes to pushing for renewable energy. We have exceeded our 42% target of renewable energy installed in our electricity capacity. We are pushing ahead with reaching our next target, which is 52% before 2030. That's our axis number one. Axis number two is energy efficiency. It's an area in which we have been a bit late, but we are very much sure that we'll be able to reach 20% of energy efficiency before 2030. And of course, the third big axis is regional integration, because we believe that Africa, being the last productive capacity, reservoir of productive capacity for the world to handle the issues of climate change and energy transitions, Morocco is really at the forefront of being that bridge between Africa and Europe and the Atlantic Basin energy-wise. So we are very much advanced on everything. We have already multiplied the pace of investments by 3 annually in the renewable energy space and by 5 annually in the grids, because we also believe that grids are important for that.
What do you think is going to happen to the global renewable investments drive, given that U.S. leadership is no longer pushing for more momentum in that space? You have the U.S. president deciding to withdraw the U.S. from the Paris framework, drill, baby, drill mantra. How is that going to affect the investing landscape?
Well, Joanna, the next session that I'm going to be talking in a couple of hours is called Build, Baby, Build here in the Munich Security Conference. And it's very much this requirement, or the world is really craving a sort of Mesmer plan when it comes to investments in the energy space and also in the renewable energy space. That's, as you can see, I think we have all the building blocks that we have been putting together, and Morocco has that 15 years of experience in developing energy projects, renewable energy projects, more than 30 years of attracting private finance and private investments. So I think it's very difficult to see now a return, a total return to the traditional energy space. I think there will still continue to be a reconfiguration of the value chains where you have the most competitive winners emerging, and I strongly believe that Morocco is one of those highly competitive actors who can actually get renewable energy being developed without subsidies.
Can you give us an update on the X-Links project that will transport renewable energy from Morocco to the UK? How do the economics look here? And just give us an update on the project itself.
Jumana, as you know, I never comment on specific projects or companies, particularly when they are driven by the private sector. But very much, I mean, this and other projects are very much aligned with Morocco's energy vision to be what we call an OTC corridor, or may I say, Jumana, if you allow me, the only OTC corridor between Africa, Europe, and the Atlantic Basin energy-wise. What we meant by that is any electron and any molecule, any product originating, being produced, transiting, or certified in Morocco, we have that certification that it's green and sustainable in the wider sense. So if we have, now the good news is that we're seeing a multiplication of those type of projects and ideas aiming to link for energy security issues multiple continents. So as long as we are able to produce, transport, and consume energy, and that's why I insist on the energy efficiency part, the most competitively, I think we will provide our populations with access to low cost and sustainable energy for the future.
Yeah, and what about the outlook for green hydrogen developments? What can you tell us about what's going on there?
Green hydrogen is also a driver, very key driver of what we are trying to achieve. And usually the way we portrayed it is that Morocco, contrary to other countries, has tried, because we have that 15 years of experience in renewable energy, so we have learned some of the lessons. We tend to do things very gradually so that we can cater for the technology and industrial and commercial risks that are inherent to maturing, if you may, technologies. So when it comes to the green hydrogen offer, we put in place a framework that allows the international and national investors to take the risks. So we have a number of building blocks that are there when it comes to infrastructure, pipelines, ports, and also access to land, and enabling those investors to cut through the bureaucracy entailing those type of projects. Now you've seen a first announcement that we signed at the occasion of the visit of President Macron to the Kingdom of Morocco back in October, between a French and Danish consortium, and you will see additional consortium being announced, and we are making sure that the private sector and the state is taking a fair allocation of risks in this regard.
Yeah. Well, Minister, I know you have a panel you have to go to, so thank you for being so generous with your time with us this morning. Leila Benali, Morocco's Energy Transition and Sustainable Development Minister from Munich Security Conference. Thank you. Well, coming up, Adnoc Drilling has reported profit for the full year that beat the average analyst estimate. We speak to the CFO, Youssef Salem, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Adnoc Drilling reported profit for the full year that beat the average analyst estimate. The company's 2024 profits came in at $1.3 billion. That is up 26% year on year and beating analyst estimates. Of course, joining me now is Youssef Salem, Adnoc Drilling CFO. Good to have you with us. Strong numbers for the full year 2024. Talk us through where the biggest drivers of growth came from.
Record numbers. So the first time we crossed $4 billion of revenue, $2 billion of EBITDA, $1.3 billion of net income. And it came from growth in every single segment. So onshore and offshore, adding more than 20 rigs this year. Oilfield services growing more than 100% year on year. Enersol, our technology platform, doing 4 M&A deals. And then Turnwell, our unconventional platform, for the first time drilling unconventional wells in the UAE.
What does the rig count forecast look like over the next couple of years? And how is the split between onshore and offshore?
So currently we're at 142, the largest fleet in the Middle East and the wider region. 95 onshore, 47 offshore, both the largest in their own right. Growing to at least 151 by 2028, so significant growth from here, with potential even for more upside.
Yeah. You've mentioned the conventional and unconventional drilling techniques. Which one of those do you see growing faster in the future?
The unconventional, that's effectively the new segment. We just landed a $1.7 billion contract last year, which effectively we're executing over this year and next year. So that's growing the business by around 25%. And that's a business that requires a lot of services intensity and hence effectively creates a very recurring stream for a very long time.
Yeah, it's interesting. You know, one of the big topics we talk about a lot is the rollout of artificial intelligence. To what extent are you applying artificial intelligence with some of these drilling techniques to be more cost effective?
We're rolling smart cameras across all our rigs, which basically use computer vision to pre-detect any potential accidents that can happen, improving safety. We're also via Enersol, our technology platform, we've acquired companies in predictive analytics to pre-predict any potential failure of equipment, any potential disruptions to improve efficiency. And technology has been a key driver to our margins going from 45% to 50% last year.
Yeah, interesting. interesting. So you mentioned some of the acquisitions, and in this particular instance, you're talking about technology-related acquisitions. Could we expect more in the future?
Definitely. Last year, we've done 4 deals for $800 million. This year, we'll do at least $700 million of technology deals, primarily AI and other energy technologies, and potentially more as well.
Yeah. You've also said that you want to look at companies with actual drilling operations. You've talked about Kuwait and Oman. Just give us a sense of what you're looking to do there.
We have a very unique proposition that we're the only drilling contractor in the Middle East that doesn't only drill but provides a full integrated suite of services and added value service to the clients. We're looking to take this proposition outside the UAE as well, starting with Jordan last year, which we've been live drilling in. This year, we're going to be live in Kuwait and Oman. So part of that is expanding also organically and inorganically into these countries.
Yeah. What about beyond the Middle East region? Would you expand into Africa or Asia? Say, where do you see opportunities there?
Yes. So in Enersol, which is our technology side, the 4 companies we acquired last year, they operate in 35 different countries, serving 70 upstream clients. We see, obviously, as I said, a massive opportunity, especially in the global south with Africa and Asia, and that's a key target for us.
Yeah. A macro question for you, which is to do with just the outlook for global energy demand and where we are right now in the cycle, the shift towards away from hydrocarbons, I should say. How do you see that affecting your plans over the medium term?
I think what we're actually seeing is, as you're probably seeing in the market now, a significant increase in activity and countries saying we want to drill more, we want to get more resources out of the ground, and that's great for us because it increases activity. So the trends, whether it's in the US or different parts of the world with more drilling, more activity, that effectively increases our volumes and profitability.
Yeah. Let me just ask you a couple of questions also about your potential financing for this year. Yes. Can we expect some debt financing to come through?
Yes, we have a facility which is maturing in Q4 of this year, so we expect to be refinancing and upsizing to fund our growth. We have more than $1 billion of capex this year, organic and inorganic, and we have dividends of at least $7 million. So we're going to be funding some of that with debt as well.
Yeah. What about share sales?
So last year, we've had a couple of placements by Adnoc and HMP, which have resulted in us being part of MSCI, increasing our FTSE weight. And now we have a much higher liquidity as a result of this. And now the majority of our investors are international investors because of these placements that happened. So they've been great for liquidity and index inclusion.
Okay. Well, that's a good place to leave it. Thank you so much, Youssef. Really pleasure to have you on the show today. Youssef Salem, Adnoc Drilling CFO. Thanks so much. Well, talks have stalled between South Africa and SpaceX to launch Starlink internet services in the country. This is following Elon Musk and President Donald Trump's rhetoric against South Africa's land expropriation laws. Bloomberg's Lonnie Prinsloo joins us now from Johannesburg. So another development vis-a-vis the U.S. and South Africa. What exactly are the issues around Musk getting a license for Starlink in South Africa?
Hi, Jabana. So basically, South Africa has this rule or regulation that all companies that want to operate here has to be 30% Black owned. And that's sort of like a redress from the previous apartheid government. And Musk has just been totally against this rule, giving away any equity in Starlink here. So there's been some talks, different talks, on could you put in an equity equivalent instead of ownership. So the talks were around maybe giving 8,000 Starlink kits to rural schools in South Africa, but with all the sort of tension building on Trump and South Africa and Elon weighing in saying that South Africa has openly racist laws, this has now sort of blown up quite a bit and talks stalled. Just basically, they want the noise to go away before they restart talks.
Lonnie, can we expect them to actually restart the talks, or is it dead in the water at this point, given the respective positions of both sides?
Yeah, so what we got from the people that we speak to that are working on the deal is that they would like to restart talks. From the South African government side, they did have hearings on can we consider equity equivalent instead of Black ownership. So on both sides, I think they would like to restart talks, but with Musk also directly weighing in on the issue of Black ownership, currently it's just really, there's a lot of tension. So currently, all of it has paused, and people are hoping that they can restart. Yes.
Yeah, such an interesting story. Bloomberg's Lonnie Prinsloo, thank you so much for bringing us the latest on Starlink and Elon Musk once again in the news. And for more stories like this from the continent, be sure to subscribe to the Next Africa newsletter on the terminal and our website and our podcast available on Apple, Spotify, and wherever you get your podcasts. Nigerian lawmakers have approved $36.4 billion in government spending this year, acquiescing to a late request by President Bola Tinubu. The budget raises spending by 9% from initial plans put forward in December. This after the president asked for a bigger budget following higher than expected revenues. Senegal says it expects to reach an agreement on a new program with the IMF by June. This after the true state of its finances was established by a recent audit report. The IMF suspended $1.8 billion of accords with Senegal in 2023, pending local investigations into government finances. Kuvimba Mining House, Zimbabwe's state miner, is planning a fresh bid to kickstart a range of projects. This a year after the government took full control of the company. Kuvimba's CEO told us the company is looking to development banks, mining companies, and traders to raise $950 million. It is planning to develop lithium, platinum, and gold assets. But rounding up at the end of the show and the end of the week and Valentine's Day, I should say, with the positive spin for markets, it's been a positive week for markets as a whole. S&P futures are leaning towards the green. Better session yesterday. Markets breathing a sigh of relief after the reciprocal tariffs announcement wasn't as bad as initially feared. And instead, what we got was a decision to make an announcement come the beginning of April. So more kicking of the can down the road vis-a-vis those tariffs. Eurostoxx futures today down 0.5%, though this is on the back of very strong gains yesterday. That index up 1.8% in trade yesterday on some optimism surrounding the potential for a peace deal in Ukraine. So that's been driving some of the sentiment in Europe and will likely continue as we head into a very important geopolitical weekend with the Munich Security Conference taking place this coming days. Right. All right, well, that is it for Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.